Welcome to the Coastal Fire Protection District, special board meeting of the Finance Committee, November 15, 2023. Roll call, please, Chief.
President Burke,
Here.
Vice President Cockrell. Here. And member of the, public.
Yeah. I think we'll pass on the pledge of allegiance for the moment. Open the meeting to any member of the public who would like to speak on anything that is on their mind and is appropriate and relevant. Hearing none, I'll close the public meeting. I move consent to the consent calendar. Do I have a second?
Second.
All in favor? Director Burke in favor?
Aye.
You are JB Cockrell in favor?
I thought I said aye.
I heard it. Yeah, okay. Moving on to new business. We are here for a presentation from California Class about investment operations open for the district. And Bob, why don't you take over, introduce yourself and the subject?
Yeah, thank you very much, President Burke. Pleasure to be here again. It's Bob Scholl with Public Trust Advisors and California Class, and I'll explain the relationship between California Class and Public Trust in just a minute. Thank you again for your time. One bit of information that would help me to kind of zero in on what you're trying to accomplish is what is currently the strategy as far as short-term cash management is concerned.
To give you a quick answer is we're diversified our cash, it comes through the county. And we have investments with LAIF, and we also have investments with pods for prior employees' healthcare.
Yep.
And we're looking for this conversation to further diversify our investments.
Good, thank you.
All right.
So California Class, probably the best way to explain what the pool is all about and how it works is it's really just a money market style investment, but specifically designed for the public sector. So it is a joint powers authority local government investment pool. So California Class is a public agency. And the history with that is there was demand across the state. We were talking about this earlier for more options in the public sector for cash management. And this was demand that was in place going back several years. And then there was a tremendous amount of liquidity in the state. You had the ARPA funds, et cetera. So that was part of the reason that California Class was launched. But the two sponsors of the JPA are the League of California Cities and the California Special Districts Association. So they launched the JPA, which officially launched a couple of years ago. And then an independent board was selected. I'd be happy to provide you with the board information. It's actually on our website as well. But we have 2 special districts, 2 cities, and 1 county on the board. When the JPA is created for this type of pool, and local government investment pools have actually been around a long time. They've grown in popularity over the last decade or so. But what happens is an RFP goes out on behalf of the JPA to hire accounting, legal, all the service providers to make a fund like this run, and also for the investment management and administration of the pool. And that's where public trust advisors comes into play, who I actually work for, because Public Trust was hired by the JPA to be the investment manager of California Class. So Public Trust, based in Denver, is the largest provider and largest manager of local government investment pools in the country. Right now, we manage nearly $85 billion in 21 separate pools around the country. Through these pools, we work with about 7,500 public agencies of all shapes and sizes, districts, JPAs, counties, cities. So it's a very diverse client base. It's all we do with Public Trust. There's not another line of business besides the management of public funds. There's no other institutional group. There's not any business focused traditionally on private sector stocks and bonds, none of the sort. It's all public funds investment management. And another layer of that is because public funds around the country are primarily short-term, ultra-conservative, fixed income strategies. That's by state code. In California, that's California Code 53601, which says basically that the guardrails are US Treasuries, investment grade commercial paper, and bank type products like CDs and money funds. So that is the sole focus of the firm, is typically very short duration, ultra conservative fixed income strategies for the public sector. So public trust is about 90 employees right now, 55 maybe in Denver. Our portfolio management team is there, the credit team is there, administration is there. And then we have folks in the field that are responsible for ongoing client service, investment management, what have you, with the tools that we run. To give you a sense, we manage more than $10 billion in Texas, Florida, New York, Michigan, and Indiana, to give you a sense for the scope of our business. So that's public trust. I should maybe pause for a moment. Any questions about the background? Okay,
So far.
okay.
So
So
how, just looking at this. Class. Stands for, is the C California?
California Liquid Asset Securities.
It's California class, California liquid. So then the Texas would be TLASS.
Essentially, it actually goes by class in Texas as well. It's, you know, it fit very well with California. I think in Texas, it's Cooperative Liquid Asset Security System, but they call it Texas class.
Okay, so I'm just trying to get this one clear. Class isn't necessarily liquid, I just heard you make reference to
Yeah.
Texas. So obviously your other states as well.
Exactly.
Okay.
Yeah, a total of 21 different local government investment pools currently. But with California starting with the C, the whole class concept and branding fit very well for California.
Yeah.
So the option right now, where we spend most of our time with California class, is California class prime. When you think of a prime style money market fund, it will hold, well, let me go back. A government style money market fund will primarily be treasuries. A prime style fund can also hold commercial paper and bank products like CDs and money market funds. And that's what California class is. It's a mixture in compliance with California code, US Treasuries, commercial paper, and bank products. It has a fixed net asset value of $1, like a traditional money market fund. There's no threat for unrealized losses. Your principal, you go into the fund at $1, you exit at $1. What will fluctuate over time is the daily rate based on current market conditions. Right now, California class has a yield of 5.55%, which is considerably higher than LAIF. And one of the questions we get is, okay, so you're operating by California code, so is LAIF. Why are you at a 5.55? And I think LAIF is, you may know Jonathan, but I think LAIF is at a 3.5. Yeah. The only difference is we operate this fund as a true money market style investment with an average duration that hasn't exceeded 45 days since we launched the fund. So the old saying, sometimes it's better to be lucky than good. Launching this fund last May, when the rate was 2.25% essentially, then with the 14 rate hikes that came down from the Fed, we've had liquidity basically every 2 months where we've been able to reinvest. And that's why the rate is where it is. The underlying portfolio really isn't that much different than LAIF, but LAIF markets itself as a short-term cash management option, but it's a medium-term strategy. So our average duration has been, let's call it on average 45 days to make it easy. LAIF's duration is over a year. I want to say 385 days or something like that. So, and LAIF has its place. LAIF is a great product, but because of the way LAIF has been managed, they've been in a difficult position from a liquidity perspective and from a yield perspective, just with this dramatic uptick in rates over the last year and a half. That's the only reason why our yield is where it is. There's two other local government investment pools. You might have heard these names before in California. One is CalTrust, and the other is CAMP. CAMP stands for California Asset Management Program. And basically what I tell most of the folks I meet with is whether it's California Class, CalTrust, or CAM. It's a great time to look at what you're doing for short-term cash management. And if nothing else, use one of the pools, for instance, as a diversification strategy, because it doesn't take much of a contribution to a product like California Class, with the rate being where it is, to drive returns significantly higher. We have several participants that have come into our pool very aggressively, but that's not typically what we find. Usually we're just a diversification option for our clients that are looking for a better yield or a yield that's complementary to life. Any questions on that part of the presentation? Okay. A couple of features and benefits, and then I'd like to open it up to all of you, but California Class has the highest rating possible from Standard & Poor's for both credit and liquidity. So it's a AAA rating for both credit quality and worthiness and liquidity. We do some things that are unique with the pool, and part of this is because of our expertise in the pool space around the country. You can have unlimited sub-accounts with California Class. So if you want to create a sub-account for a designated, call it bucket of monies or capital, you can create as many sub-accounts as you might like under your master account with California Class. We also do something unique in that you can post-date transactions up to a year out. So if you wanted, we have clients that predate. We have clients that predate payroll transactions coming out of California Class to a bank account, happens automatically. We also do something unique in that S&P, Standard & Poor's, gets a feed of our portfolio daily. Oftentimes in the marketplace, you'll see quarterly feeds to S&P, maybe semi-annual, sometimes even annual. We do that on a daily basis just to try to differentiate what we're doing in the marketplace. Lastly, Public Trust has been known around the country to really have state-of-the-art technology for our participants. We have been a leader in development of portals, participant portals for our clients. So with our portal, you can basically do anything you might want to do with your account with California Class right there on the portal. We have a dedicated team of about 5 people in client service. If there's a problem, question, typically same day turnaround, if there's a question or a problem that needs attention. But for the most part, that portal is going to drive your entire relationship with us, money coming and going, printing customized reports, pulling up the portfolio on a daily basis. We have a resource center there that talks about interest rates, your options, the public funds marketplace. We get as much positive feedback on the portal and the client service model as we do the pool itself. It's incredibly easy to use, incredibly intuitive. You may or may not know, with a lot of county pools right now, agencies are having to go into the county office to physically make a deposit or pull money out of the county pool. We are in a different situation entirely with our technology and what we make available to our participants at their offices. If you'd ever have an interest in doing a quick demo of the portal, it takes 15 minutes. We would be happy to do that for you as well. So those are sort of the highlights. When you're talking about a money market style investment that's ultra short in duration, it can be a fairly brief and quick presentation. So those are the highlights though.
Thank you. When I first read about California Class, it was talking about the prime account and the enhanced account.
Yeah.
I understand the enhanced account is not available at this point.
So the way it works is when we form, or when the JV was formed, for the documents, we had to list the options that would be available eventually to our participants in the JVA. So there's the prime fund, and I handed out a piece that I think highlights the enhanced cash fund when I was hanging up the materials. But we have not launched enhanced cash, and the reason for that is we just don't have any interest in it right now.
What is the difference?
The difference is enhanced cash is a medium-term strategy, 9 months to about a year and a half. So the beauty of the prime fund for any of our participants, if you need that money, if there's a cause to take a distribution, you find a better option, whatever the case might be, you have daily liquidity with the prime fund. If we have trade instructions by 11 a.m. any business day, the money can move the same day with a wire or next day with an ACH. But again, it's about a 45-day duration with a fixed net asset value of $1. Enhanced cash will be an option when we have a better sense as to what's happening with interest rates. And we will consult with all of our participants on this, because enhanced cash will go further out in duration, further out in the yield curve, and lock in, a portfolio at today's higher rates. Now, the fundamental difference between prime and enhanced cash, prime has a fixed net asset value of $1, enhanced cash will fluctuate. It's not going to fluctuate that much, just the nature of a short-term portfolio like enhanced cash will be, but it can fluctuate. And I meet with boards that simply say, time out. We don't want to go down that path. We don't have the chance of unrealized losses. And I totally understand that. The advantage of enhanced cash, when the timing is right and we see a definite plateau in rates, our folks, and again, we have a very deep talented bench in portfolio management and credit research in Denver, is we think we're going to be sort of at the same level. We could see another hike. Who knows, right? Everybody's crystal ball is as good as for the next year to 14, 15 months, and then we could start to see a pullback. So when we see that plateau, when we see rates pulling back, enhanced cash might make sense, because that net asset value that can fluctuate, when interest rates are dropping, it's an inverse relationship, prices go up. So the likelihood of there being a significant loss in principal in that type of rate environment when rates are dropping is fairly minimal, but it's not for everybody. We will have some participants that may gradually allocate over to enhanced cash. We have, we have no transaction fees, no minimums, no redemption
But
fees.
you can go from prime to enhanced.
Yes, overnight essentially. So to your question, President Burke, that's the reason why enhanced cash is there. But, to be really candid with you, LAIF will start to look a lot better in that environment. So if participants decide to go back into LAIF, then that's an option too. But we just wanted to be able to have an option, should there be a desire to look at a medium-term strategy. The other thing we do, I should mention too, is we manage about 10 billion across the country in separately managed accounts in the public sector. So we will meet with a public sector entity, get a sense for your cash flows, your maturity objectives, what you're trying to do as an organization, and we will build custom portfolios as well. In addition to the pools that we run. Sorry, I'm losing my voice. So
You had mentioned is, we can categorize our investments by different terminology and so forth. Although the fungible, once we put something in a particular category, the need arose, we could change that
Yes.
tomorrow.
you can move from sub-account to sub-account.
Okay.
Yeah, it's full flexibility.
I don't, Chief, please jump in if you have any questions. Well, it was the one that I had, and I'm not sure, but if we currently want to take money, we have to do to occasionally from late to go to the county to spend it. What's the timeline? What's the difficulty? Is that, done automatically in a computer, or how does that take long?
It doesn't take long. I think we can do it within a week. Where it does take a lot of time is actually go in the reverse to go from the county to the.
But did I understand you to say a little bit earlier that there was, it could be done, we could use, CalClass and do it much more rapidly without going through that?
Well, you do have same-day access essentially to your monies. Again, if we have trade instructions by 11 a.m. And typically that's a relationship between a district, a public agency, an entity, and their bank. Now, we can take a contribution directly from a county pool via wire. But that liquidity is simply to exit, for instance, California Class, to do a wire or an ACH to a corresponding bank account.
Which is a lot easier for us now, as we've just gone through the transition to the county, from a pooled account of all special districts to our own individualized bank account within the county.
Okay.
So that ease of transfer is much more rapid now because they don't have to determine what agency it's for.
I guess I have a comment, because assuming the board goes forward with California class, if there's a way to ease the time delay or bureaucracy in something by using California class as opposed to late and transferring it, and I look to you to suggest that now option that would be just up to you to decide that. Let me ask one of the. Yeah. Let me make it quickly, there's a board of directors on California class, this is, I'm not sure if this is your appropriate point, a person to ask, but who I know, I see who they are, how are they selected and by whom?
They were appointed by, in conjunction with the CSDA, the Special Districts Association, and the League of California Cities. And then there was a treasurer, he's actually the treasurer of Tehama County up north, who was the county board representative that was appointed as
So
well.
the California Special District Association picked
Yes,
their representatives to do that.
Yeah.
This, again, we may not know this, did California Special Districts vote on those people, or they just appointed?
purely appointed.
Okay. What power do they have?
They have complete power over the pool. They have complete fiduciary oversight of the pool. We engage with the board on a regular basis on a whole variety of matters related to the pool. We have quarterly board meetings. We just had one in Riverside, about 3 weeks ago. So it's really a product that is built by and governed by the public sector. Now, these folks that were appointed, I will say, had a certain level of experience. Maybe they were a finance manager at one point within a district, for instance. Maybe they had some public funds investment management experience. So there's a little bit of a selective process.
I'm sure.
Yeah.
I just was curious.
Yeah.
How they.
Yeah, you mentioned speed at which we're doing these things. Was this like a website or would we would access
Yeah, it's
a computer?
Yeah, well, just to go through the whole process, we have a application, we call it a registration packet. It takes about 10 minutes to complete. It's very easy. Once that's returned to me or sent to our Denver office, the account is established that same day. And you are live on our portal with the application. Then you can fund at any point in time you would like. That's completely up to you once the account has been established.
So then myself or President Burke could sit down in front of his computer and
So you have authorized.
have his morning coffee and
Sure.
start moving stuff around.
Well, yeah, you have authorized users.
Right.
And then you have authorized
The jail.
signers, typically dual authorization
Yes,
to move monies back and forth.
but that would be done. Yeah,
Right there on the portal.
On my normal PC, I could,
Yeah, you get access to the portal.
or Fox and whatever. And with, along with the second authorized.
Yes, right. Well, the authorization is really just to transact, to move money in, move money out.
Yeah.
Yeah.
One of the things we'll probably come to our board later today would be to the best, million and a half dollars on the Cal class. How does that stand up with the average investments by a public agency in Cal class?
Yeah, so right now, we're approaching $900 million in total assets in California class, 130 participants. We have a tiny cemetery district way up north that has $5,000 in the pool. We have a city that's got $60 million in the pool. The average account size is about $1.5 million to $2 million.
Oh, is that right?
Yeah.
So we would fit into the
Yes,
average.
Absolutely. Absolutely. We have, telling Jonathan, I think I might have overstated it when I talked to you on Monday. I think we have 7 fire districts, in the pool right now. So we were at the, fire conference and we had the fire conference in Napa.
And now, no,
Oh.
at
that.
that.
Okay, yeah, so, we were there in March, I think that was, I'd be happy to share those names with you if you have an interest, so.
But if, in an upcoming board meeting, one of the board members should say, why should we invest in California class? What would the answer be?
The answer I share with most people is, interest rates were so long, were so paltry for 7 or 8 years, almost a decade. And we have this unique situation now where rates have spiked up. And if you're looking at your organization and you're looking at the management of public sector dollars, the term fiduciary doesn't really apply in the public sector like it does in the private sector. But what I always talk about is, what is prudent. And right now, with a fixed net asset value of $1, with a rate at 5.5, with a AAA rating for Standard & Poor's, and with daily liquidity, it's a great opportunity to take advantage of the current rate environment, quite frankly. And as I said before, that's a client by client decision, in terms of a diversification strategy that's complementary to LAIF or complementary to a county pool. We have had participants that have come in aggressively, but that's typically not what we see. Typically, it's just a diversification story, as it relates to LAIF or a county pool.
Thank you.
Sure.
Chief, did you have any questions?
Just on the return, obviously the interest rates are high right now, and you have that 5.5%. And if I'm hearing correctly, it didn't start until May of this year,
May of last year.
May of last year. On the kind of zero rate environment we were in, what would that have looked like?
We would have been close to zero if all things being equal. We would have been better than a government money market fund that's holding us treasuries because of commercial paper and bank products. But, yeah, I think it was, I might have mentioned this, I think we were at 2.30, at 2.30 May of 2022, as we were just building the fund. And that short duration strategy is the only reason why we've climbed like we have. But I will tell you that, just full disclosure, we're a bit higher than CalTrust and Camp right now, not that much in terms of rate. And all three pools are separate entities, but there's just a lot of interest right now, given the discrepancy between these pools and LAIF, these pools and the county pools.
Is Cal Trust related to LAIF?
No, not at all.
It's completely separate?
It's a joint powers authority pool as well. BlackRock managed CalTrust for quite some time. They were the investment manager. They just switched to State Street Global Advisors.
Okay.
Camp is actually managed by Public Funds Management, PFM. That's a very large player in the public fund space.
Sure. Gene, by any chance, if you're on, did you have any questions? Gene doesn't have any questions.
I guess one last question, Bob, what is the, it's probably on here, the rate that is class charges to?
Yeah, I'm glad you're bringing that up. So just to review, there are no transaction fees at all. There's not a fee to move money back and forth within sub accounts, et cetera. And we have no minimums either in terms of inbound transactions or withdrawals. The only fee that's charged is per the Joint Powers Authority. We can charge a maximum of 15 basis points for the investment management services that we're offering. So 15/100%. Right now, though, we're only charging 6 basis points. And that's something we've done in the past with our prior pools, where we keep the expense ratio low at 6 basis points, can go as high as 15. If you look at our other pools around the country, it'll probably settle out at 10 to 12 basis points. But if you're online, if you hear from me a yield of 5.55%, that is after fees have been charged. That is net of fees. Yeah. So, but that's the only chargeable. Thanks.
JD, did you?
Well, I just got onto your website now, I'm just trying to work my way through it. And just gonna look at it and see.
Yeah, there's a lot of good information there. We actually put a calculator there recently, which people kind of like.
Well, a lot of what you're talking about is here, like your investment options, for example. Definition, West California class, who can participate, things we're talking about.
Yes, absolutely.
Right here.
And then Public Trust Advisors has a separate website if you wanted to look at the people behind the management of the fund.
Okay.
Thank you, I think it's, other than Campos, California Special District, maybe you cities that they contracted with public trust to provide an additional alternative for local government. I think this is why it's going to be used, at least at this point in time, the management of the results that you achieved has been admirable.
Appreciate that.
Thank you very much for being here.
Yeah, we love, hearing back from our clients that the added interest income helped to buy a piece of equipment or went towards hiring an employee or a group of employees or a building, what have you, you know, it's real, interest income that can make a difference.
Isn't competition wonderful?
Yeah, exactly, right.
Thank you very much.
Thank you so much for your time.
Thanks,
All
Bob.
right,
Thank you. Thanks, guys.
You got it.
Yeah,
Take
take care.
You
Thank you
too.
for helping me out.
Will do.
all right, thank you. Nice to meet you.
Same here. Thank you so
Nice
much.
to see you.
Nice meeting you. Thanks.
Bye-bye.